Welcome to the GFU Forex trading course. The rounded bottom is a reversal pattern that helps to capture the end of a downtrend, and it signals a potential reversal of a downtrend in the market. As we can see, the rounded bottom pattern appears as a letter U shape. There are three essential parts for the formation of the rounded bottom chart pattern. Number 1, the rounded bottom, the bowl. Number 2, the brim, the horizontal resistance. Number 3, the breakout point. Let's study this chart. As we can see in this downtrend on the Algo USDT day chart, after the price plunged to the low swing here, price eventually resulted in a consolidation phase. This consolidation phase transformed into a rounded bottom. This rounded bottom has two brims. The first brim of this rounded bottom can be derived by connecting the series of swings at the resistance zone 0.3771. Next, there was a bullish price breakout of the first brim of this rounded bottom here. And the price proceeded upward to test the previous resistance at the 0.4205 price level. We were able to connect another resistance key level from this swing high on the left-hand side to the second swing here. We can see how price later tested the second and first brim of this chart pattern. The first brim, support, at 0.3771 acted as valid support for the bearish retest after the bullish breakout. Traders who missed the bullish breakout of the second brim were given a second chance at the retest of the first brim here. How can we set our stop loss based on this rounded bottom chart pattern? Traders who took the bullish breakout of the second brim here can place their stop loss at the low of the higher low swing here at 0.2771. While traders who bought the retest of the first brim here could have their stop loss at the low of the retest of the rounded bottom at 0.3665. How can we set our take profit based on the rounded bottom bullish breakout? Swing traders can ride the trend to the major resistance swing level in the market at 0.7604 price level. Alternatively, traders could apply the measurement objective target. For measurement objective target, measure the rounded bottom from its low to the second brim, and then extend the value upward from the second brim breakout point upward in order to have an idea of the possible price movement. The round top is a reversal pattern that helps to capture the end of an uptrend, and it signals a potential reversal of an uptrend into a downtrend market. As we can see, the rounded top pattern appears as a letter N shape. There are three essential parts for the formation of the rounded top chart pattern. Number 1, the round top, the umbrella. Number 2, the brim, the horizontal support. Number 3, the breakout point. Let's study this chart. As we can see in this uptrend, after the bullish rally got exhausted, price transformed into the round top chart pattern. We can see how the price switched from higher high on the right-hand side to lower high on the left-hand side. This rounded top chart pattern has a minor segment at the price level of 1.40760. This segment can be tagged as the first brim of this rounded top. This first brim was broken by a strong bearish candlestick. This strong bearish candlestick proceeded further to break out of the next support at 1.40048. This chart pattern does not usually come with a retest of the brim whenever the brim has been broken. A retest does not usually occur because the patterns technically reveal the switch of the market strength from the other side of the market. In this case, there was a retest entry opportunity for the conservative trader who was skeptical to sell this long bearish candlestick that broke the second brim of this rounded top. The first segmentation of the rounded top chart pattern also gave an indication of the loss in the bullish momentum in this chart pattern. Traders can go short at the bearish breakout point away from the second brim level. Alternatively, traders can go short at the retest structure here. Day traders can set stop loss at the high of the retest of the candlestick at 1.40020, while swing traders can set their stop loss above the high of the lower high swing at 1.41402. There are 4 ways traders can apply take-profit targets in this sell setup. Number 1. Traders can target the next potential support level in the market. Number 2. Traders can target a minimum of 2 risk-to-reward ratios from the second brim breakout point. Number 3. Traders can trail profit down as the trend moves lower. Number 4. Traders can apply the measurement objective target. To do this, take the price measurement from the top of the round top pattern and measure all the way down to the second brim of the pattern. Next, replicate the measurement value down from the second brim of the round top in order to forecast the potential price move. Here is another rounded top that acted for the continuation of the existing bearish trend in this market. After the rounded top was confirmed by a strong bearish close of the price below the brim of the pattern, the bears pulled prices lower. Again, conservative traders who ignored the first bearish price breakout were given another chance to make a sell entry at the retest zone here at 1.36981. We can see how the bearish trend resulted in another aggressive bearish rally. The rounded bottom we discussed earlier reversed the bearish trend into a bullish phase at the low swing here.